starting November 15th, Fannie Mae is going to be removing its 620 minimum credit score requirement for underwriting. Now, there are tons of articles that I'm seeing, and that's what first caught my attention about this, making it seem like now everybody's going to be able to get a mortgage, even if you have really bad credit. If you couldn't get a mortgage before, this is just going to be life-changing for you. When you click on the articles and you get a breakdown of what's actually happening, it's a little bit different of a scenario. So first, we have to talk about how mortgages work and then how this change actually has an impact, if really any at all. So basically, when you get a mortgage, you are going to go to your mortgage broker. You're going to get a mortgage. They can't just loan money and then stop and hold those mortgages for 30 years. Otherwise, eventually, they're going to run out of money to loan, and they're going to loan, and then they're just going to be stuck. And so what happens is you have the back end of the mortgage industry where you have the people that are on the front lines, they're originating the mortgages, and then you have places like Fannie Mae, Freddie Mac. These are GSEs. It's a government, what does it stand for? Government supported enterprise, I think. Let's see. Government sponsored enterprises. And so on the back end, they're either they're packaging these loans, they're selling these loans, then like life insurance companies, big institutions will buy these packages of loans. So then there's more capital back with the lender to re-inject and do more loans. But because they want to protect their investment, any loans that Freddie Mac, Fannie Mae, Ginnie Mae, all these back-end people are going to buy, and back-end people, I mean entities, they have these parameters. If you want to be able to sell a mortgage on the secondary market, it has to fit into a box of requirements. That's why if you are maybe have a weird loan situation, or maybe you're doing a short-term loan or something, a lot of people will use a local bank because they're going to keep it in-house. They're not trying to sell it on the back end. They're keeping it in-house. They're servicing the loan for the life of the loan. These standard conforming, you go get an FHA, a conventional, any of these loans, they're probably going to be packaged and sold in lots on the back end. And so these companies, these GSEs, Fannie Mae, Freddie Mac, they get to say, if we're going to take these loans off of your hands, if we're going to buy these packages of loans, they have to fit in these requirements, meaning here's your minimum credit score. These are what the interest rates have to be. These are what the terms have to be. This is what makes this person qualify for this loan if you want to be able to sell it to us. So now Fannie Mae is saying we're going to remove this 620 minimum middle credit score requirement for purchase and refinance home loan credit decisions. It says Fannie Mae is following Freddie Mac's lead from several years ago when it eliminated a minimum required middle credit score for loan approval. And so here's the way you got to look at it though. That is the minimum for the loan type. Now lenders, who are the people, so you're probably dealing with a mortgage broker or a loan originator when you go and talk to somebody about getting your loan. But then behind them is the company whose money they push and lend out. They're going to have a whole nother set of overlays. So they're going to say on top of the minimum requirements, we have to meet these. If we're going to loan you money, you have to meet now these additional requirements, these additional overlays. Because if I am an entity or I have a lot of money or I'm a company and I'm going to loan you $250,000, $500,000, I'm sure as heck going to make sure that you qualify. So even if Fannie Mae says we're removing the 620 credit score requirement, the lender, who is the first person ponying up the money, might say, we're not. We still have these minimum standards that we're going to put in place that you have to meet to be able to get a loan through our company. And so that's the first thing that you have to think about is even though Fannie Mae is removing it, the lender you're working with may not be removing their overlays on top of it. Several years ago in the town that I live in, there was a company called Mortgage Solutions. And Mortgage Solutions catered to riskier buyers with worse credit, worse debt to income ratios. And so they went off of the loan requirements, but they didn't have any additional overlays. But because the loans were so much riskier, they would have more expensive closing costs, they would have higher interest rates because they were granting loans to people that nobody else in town would. That was kind of their bread and butter. That was their specialty. Now, the other thing that you have to think about is when you dig through the weeds, they're not just saying now that Fannie Mae will accept a loan from any bad credit poorly qualified buyer. When you look back into it, what's actually happening is they have something called the VantageScore 4.0. And so the whole point of this is they are trying to help people not with bad credit. They're trying to help responsible consumers that maybe don't have credit yet or have very little credit be able to get a mortgage. And so if you've ever been in a position or known a person, or if you're in the real estate world, worked with a client, they don't have debt, they don't have bad credit, they haven't been irresponsible with their money, but maybe they just haven't established credit. This could be an older person who buys everything in cash or hasn't had a loan or a mortgage or a credit card in a long time. Or this could be a young person who maybe they just finished school, maybe they just finished college, they have a decent job, they don't have bad debt, they have good financial history, but they haven't, same thing, they haven't had a chance to get a car note. They haven't had a chance to have a credit card or a credit card for a long time. They've never had a mortgage before. So what this is trying to do is make it possible for somebody who is responsible, who just has not established credit yet, to be able to get a mortgage or get into home buying sooner. And so what this VantageScore 4.0 looks at, this is instead of FICO, they're trying to be a more comprehensive way of looking at the borrower, and they're going to look at things like if they have a cell phone, have they been paying their cell phone bill regularly, reliably for years? Can they document where they've rented? Have they been a responsible renter and made those rent payments on time and in a reliable manner over the years? So they're going to look at other things rather than just, have I gotten debt? Have I paid my debt? Have I gotten debt? Have I paid my debt? This doesn't now say if you have a 490 credit score, 500 credit score, or a 550 that someone's going to give you a loan. It's trying to create a way for somebody who doesn't yet have established longer lines of credit, that doesn't have that 6 month, that year of having a credit card and paying it off or anything like that. And so when I see these articles, I think they're being a little bit misleading because it looks like, and the way they're, of course, they want you to click on them. They're making it look like anybody that couldn't get a loan before is not going to have that hurdle. Now, this also doesn't mean that the lender you work with is going to be using this VantageScore 4.0. So even if Fannie Mae is allowing this, if the lender is still using FICO, this isn't going to help you. So if this is you and you're somebody who hasn't used debt a lot, and again, you don't have bad credit, you just don't have a lot of established credit, you're going to have to talk to your lender and ask, are they looking and using or going to be willing to use this VantageScore 4.0, or are they sticking with FICO? If so, it's not going to have an impact with that lender. Other thing is, this is starting loans that the process starts on November 15th. So if you're starting today, this isn't going to apply for you. You're going to have to wait a little bit. But you could call around. You could talk to lenders and say, hey, will you guys, when this comes into play, November 15th, will you guys be using or willing to use or looking at this VantageScore 4.0, or are you guys not touching that and sticking with FICO? So yes, Fannie Mae is eliminating its 620 minimum middle credit score requirement for purchase and refinance of home credit and refinance home loan credit decisions, but it's not as aggressive as an impact as some of the articles may have you think.